Friends, today I wanted to talk about a report published by SEBI on intraday traders in Indian equity market. Let me read it out for you. Around 1 in 3 individuals who trade in equity cash segment incurred losses. That is, more than 71% in equity cash segment incurred net losses in the financial year 2023. And interestingly, these people are in the age group, more than 76% of this in the age group less than 30. And they are not married. Okay. And this data also gives you one important thing is that from 15 lakhs traders in 2018-19, it has become 69 lakh traders in financial year 2022-23 is the number of people trading in the equity segment on an intraday basis. Basically, they are trying to speculate the price movements. I just wanted to give you an interesting thought. As the veteran investor Warren Buffett said, if you are not willing to own a stock for 10 years, do not even think of owning it for 10 minutes. But people keep trading and doing it as a more of a instant gratification what they're looking at, and they make huge losses. It could be on their borrowed money, or it could be from the money given from their parents and other things, which is a very detrimental sign. And this instant gratification unfortunately will not work in investing, because investing is a boring and long-term game. And people should understand that the longer you stay in the equity market, as the economy grows, the growth in the economy will be captured by the companies, and you can see the profitability coming into your investments by way of long-term investments, which is very much available in the highly regulated mutual funds, which has got a professional fund management things and easier liquidity, and those are all well diversified, where all the risk measures and checks and balance are in place. So young investors don't fall prey for instant gratification, do not take leverage position. And I am not even talking about F&O, which is even a bigger loss-making thing. Even in equity, people lose money like this, and it will give them a very bad experience in an economy like India, where the number of SIP accounts are hitting new heights, and domestic institutional investors are overtaking the foreign institutional investors by pumping more money into the equity system. Our markets are more stable, and it is growing steadily. We are transitioning from 3.5 trillion to 7 trillion economy in the next 5 years, with good amount of incentive available in the companies by way of PLI, production linked incentives, by giving opportunities for new companies where there is a tax deferral, and all these things are good for the economy. And people should also give time to the investment rather than timing the market and losing the position, because as you know, when the market opens up in India, what is happening in US and Japan, or what is happening in Middle East and other things, everything will have a impact in the market. So the opening price and the closing price will not happen in the same direction. It might open in red and it will end in green. Sometimes it will open in green and end in red. So predicting is not the fundamental criteria. Investors should move from wealth creation, because the opportunities are very, very high, and our markets are more matured, and we are growing in a much better way. So stay invested to understand what type of strategies will help you. If you're looking for investments for short term, medium term, and long term, kindly get in touch with us, and don't fall prey to any of the trading perspectives, so that it will be highly impactful, and it will erode your finances, which is not good for yourself and your family.